Okay, so I decided I would give a bonus video on building your own strategy. And that's because I've already provided you with 3 videos on how to build your own strategies. However, there were a couple of things I probably left out. To be honest, there are a lot of tips I can give you. But I decided I would give you 2 more tips on how to build your own strategy, and um, I would show you the my thought process when I'm building a strategy. So over to the charts. I've just installed on this chart. I've just installed an indicator. It's called I Paramount Work Time. Now this is an indicator for MetaTrader 5. Now if you use TradingView, you'll definitely be able to find an indicator that works like this. What this indicator basically does is it shows you, it colors the different time frames, sorry, the different time zones, or the different market opens and closes. For example, this one that is dark or black is the Asian session, and this lighter blue one is the London session, while this slightly darker blue one is the New York session. Okay, but you definitely, whatever platform you use, if you use one of the popular ones, you should be able to find an indicator that can do this for you. Okay, so basically I've done this because the next tip is going to be trading, or rather is going to be building your strategies based on market sessions. Okay, market sessions actually play an important role in how price moves. And I will give you an example. So this, like I've mentioned, let's go to the last day. So this is 19th of June, which was yesterday. Now this was the Asian session. From here to here was the Asian session. And this was the London session, while this was the New York session. Okay, so sometimes what happens is in the Asian session, which was here, price would sometimes break the low of the previous day, like it did here. You can see where it broke the low of yesterday, of the previous day, which was Thursday. Here it broke it here and then went back down, or rather continued going down, and then came back up to close above the low again. You can also say it came back up to close above the low of the previous day's New York session. Okay, and then after doing that, it hovered a little bit and then started going up. But when did it start going up? It started going up in the London session. Okay, so sometimes price will go in a certain direction in the Asian session, and then in the London session, it will reverse that direction. That's what happens sometimes. Sometimes price goes in a certain direction in the London session, and then in the New York session, sometimes it will break the high of the London session and then go back in the opposite direction. So it reverses the direction of the London session. Of course, this doesn't happen all the time, which is why I always talk about backtesting and testing out different ideas to find out which ones are the most probable to happen, which ones are the most likely to happen. Okay, so some traders they look for a break of the low of a previous session, previous trading session, or they look for the break of a high and a return back into that session, or a break and a continuation in that same direction. It's up to you how you want to trade it. But again, whatever you do, you need to study and backtest whatever you are doing. For example, if you were to say, okay, what happens when a bar, this is the 15-minute time frame. What happens when a 15-minute bar breaks the New York session of the previous day and closes below? What happens? Does it continue going, or does it reverse? What happens when then a bar in the New York session of today breaks the low of the London session today. Does it reverse back upwards or does it continue going down? So there's so many things you can start to do. So there are the highs, there are the lows of the sessions, but you also have the mids. I have one strategy that works off the mid of the Asian session, and I'll give you an example. For example, if we take this Asian session, so I'm just using a Fibonacci tool to show me the bottom and the top of the Asian session. Now, the mid will be the 50% point, which is here. So this is the middle of the Asian session. Okay, sometimes in the London session, price will come to the mid and hover a little. As you can see here, I'll just increase this. Can you see how price came in the London session? It came down here. Where did this bar stop? It stopped it stopped dead on the mid, and then it broke down, created these two bars. But what did it do? It came back up and bounced off the mid before it started going down. So you could ask the question, what happens when price in the London session breaks and bounces off the mid using a pin bar? What happens if it happens in the London session? Can I trade that in the direction of the bounce? And then you start to backtest and go back in time and say, okay, where did it bounce off the mid? Let's take this other day. Remember, I said the examples I'm giving you are not planned because I didn't want to pick the best examples and show you. I am finding these examples as I am speaking. Okay, just to show you how often these things happen. We take this as the Asian session. Now let's find the mid. The mid is the 50% fib point. So let's just draw a line there. Okay, there's already a line here. Let's pick that line and move it down to 50%. And then we can remove this tool. Okay, so this line is the 50% point. Now, can you see what happened here in the London session? So in the London session, price opened below the mid of the Asian session and then hovered a little, went up, touched the line, or almost touched the line, and then bounced back down, hovered a little, went way down, went back up again, and in the New York session, it went all the way down. That's just to show you there is something happening around the mid of the Asian session. But of course, you will not know the mid of the Asian session until the Asian session ends. So, of course, it would only be in the London session or in the New York session you will be able to react to the mid of the Asian session. Let's just take one more example. And remember, it doesn't have to be the mid. It can be the low, it can be the high. In fact, let's see if we can find all examples here. This is the Asian session again. So what we'll be doing is we'll be checking if price reacts to all three, high, low, and mid of the Asian session. Okay, so you can see here, we'll just put a line on the mid. Can you see how price opened in the London session? It opened above the mid of the Asian session. But what did it do? It came down and bounced off the mid of the Asian session. It bounced off the mid and closed above the mid and started to go up. Okay, so that's a reaction to the mid. What did it do here? It went up to, let's move this line here. It went up to the high of the Asian session, tried to break, closed above a little, came back down, hovered around that high for a long time, for an hour before it properly broke. But when it broke, it still came back down again to test it, to test this high of the Asian session, and hovered around and then broke up again. What did it do? It came back down. It's so obvious when price is struggling to break a specific point on the chart. Okay, it came back down again and then broke below this high. But what did it do? It came back up and bounced from that same Asian high. That just shows it's reacting to that Asian high. Okay. And then, of course, in the New York session, it finally broke and went upwards. Let's see if anything happened to the low of the Asian session. Yeah, nothing happened to the low of the Asian session because price opened above the mid anyway. So, and price remained above the mid for most of the London session and the New York session. Okay, so that's basically how you build your strategies. You start with an idea and say, what happens when price does this in this session to the high of that other session or to the mid of this session? Does it bounce off? Does it continue? And then when you've laid out that idea, you then start to build other ideas on top, other conditions on top. Okay. Now I will give you an example. So what I would do if I were to build a strategy on reactions to the mid, let's say reactions to the Asian mid, what I would do is this. I would draw a fib to give me the mid of the session, which is the 50% point here. So I can now remove this. So this is the mid. Let's also mark out the highs and the lows, high and low. And I'll say, okay, when the London session starts, let's see if we have a reaction to the mid. Okay. So we have a reaction here. We can see a bounce off, a bounce off, a bounce off, a bounce off. Okay. Now, how am I going to trade this? How do I know whether price is going to bounce off or if it's going to break the mid and continue going? So you can start to ask the question, what if I wait for a reaction to the mid of the Asian session and then I wait for a bounce back to the high of the Asian session and then I take a sell from there? Okay. Now, this is just a random thought. This is not something I've back tested, but this is how I would start to think. So what I would do is, because, okay, so the reason I've moved from here is because after it reacted to the mid, it didn't go back up to the high. So we can't use that example because price didn't go that far then. Let's pick this example. Let's see if price moved that way here. Now, we say price comes to the mid, reacts to the mid. So you can see the 50% point here. It reacted there. Okay. And then it bounced off and went to the Asian high. You can see where it reached the Asian high there. Okay. Let's wait for a reaction to the Asian high to be sure that price is not just going to shoot up. And then we wait for a bar that signals that it's going to go down. Nothing happened here, nothing happened here, nothing happened here, nothing happened here. But on this bar, we can see a bearish bar here. Now, on that bar, we take a sell. But when we take a sell, where will our stop loss be? Sometimes stop loss can be measured from structure. For example, you can look to the left and see that the previous proper swing high was here. You can pick this, or you can pick the closest one, or this one. Okay, so you can say, I am going to take a sell when price paints a bearish bar here, which it did, but my stop loss will be when price closes. Remember, I told you some time ago that I don't put hard stops. I watch the chart, and when price closes above what would have been my hard stop, that's when I get out of the trade, because price wicks a lot. Okay, so I can pick here and say, okay, you know what, I'm going to put my stop loss here, my soft stop loss there. If price closes above that stop loss, then I know I was wrong. Okay, so I would have entered at this point, and then my target would have been the same 50% mid of the Asian session. Okay, so I would have taken a sell here and aimed for the mid here. And what would price have done? It would have come down a little, gone to what would have been my hard stop loss if I had put a hard stop loss in, but it bounced off and came down to here, to where my take profit is, and I would have made my profit here. You see, this is how you start to build your strategy and say, okay, so that worked there. That doesn't mean it's always going to work. So I'll go to the next day and check if the same thing happened. I will draw the fib tool to find my 50%, which is there. And then I will start to ask, okay, what happens when price goes to the 50%, bounces off, gets to the low? Remember, we used the high last time. This is just the reverse to find buy trades. Okay, reaches the low of the Asian session, reacts to it, and creates a bullish bar this time. Remember, last time it was a bearish bar because we're looking for sells. Now we're looking for buys. Now, this is what happened. It created a bullish bar on this bar, and we would have taken the trade here and looked for the next swing low as our stop loss, which would be here. So we would say when price closes below this line, we will come out of the trade. But if you look at this, if we entered on this bar, where would have been our take profit? It would have been here. But our stop loss would have been all the way down there. Now, you know that I don't have a problem with negative reward to risk. However, when it is very skewed like this, then there is a problem, especially when price has already closed close to what's going to be my take profit. I most likely will not take that trade. If price had closed maybe here, oh, then that would have been fine. I would have taken it up to here. And yes, this could have been a loss. But price already closed here, which is just 4 pips from my take profit. That is not a very wise trade to take. Okay, so in backtesting, again, you backtest these and say, and try and work out when it closes close to the take profit, does it work or does it not work? If every time it closes close to the take profit, it always works, then to be honest, there's no reason why you should not take that trade, because at the end of the day, you will be profitable, because most times it closes close to the take profit, it reaches take profit anyway. But naturally, without backtesting, I wouldn't take this. Okay, so I would move on to the next day. And then let's see what happened here. So this is the Asian session again, and this is the mid. Oops, that was a vertical line. I need a horizontal line. Now this is the mid. Okay, so price opened above the mid, the Asian mid, came to the Asian mid, reacted because it closed dead on the mid, and then broke, did whatever it wanted to do, but came down. It didn't go up to the Asian high, so we can't use that. It came down to the Asian whatever, the Asian low, and closed and just kept shooting down. So it didn't react and give us a bullish bar. So we really can't do anything there because it just broke and kept going down. If it broke and painted this bar and then painted a bullish bar here, then we could then start to take it back upwards. But after creating this bearish bar, we can't be looking for buys there because price seems to want to go down. Okay, so this is how you start to work things in your favor and start to analyze and work out what works the best. This example, this is the 50%. or this is the mid of the Asian session. What did price do? Price opened in the London session and didn't even come back down at all to react to the mid. So we couldn't have done anything there. But this is just what, 4 days that we've looked at. If you go back in the past, you definitely will find instances where that happened. Have we looked at this? No, we haven't looked at this. Let's see what happened here. So this is the Asian mid, my 50%. What happened? Price opened in the London session, price opened below, closed above the mid, so no reaction there. Came back down, reacted, okay. Hovered around the mid, yeah, which is good. And then came back down to close below the low of the Asian session, but then reacted with a good bullish bar here. Can you see that? Reacted with this bullish bar, at which point we can decide to take that trade as a buy trade. Because price didn't just close below and keep going down. No, it didn't do that like it did in our last example. Price reacted and closed with a bullish bar. Okay, so we can then say, where is the next swing low to be our stop loss? I've just put a line there to mark our swing low. Okay, we can see that there was no swing low anywhere close. Now, what I do in such circumstances when backtesting is I say, if there's no close swing low, I make my stop loss equal to my take profit. So it's a 1-to-1. Okay, because there's no clear place to put my stop loss. So what I do is this. I say, where's my stop loss? My stop loss is, where's my take profit? My take profit is going to be at the mid of the Asian session, which is here. So that is from here to here. So from here, which is my entry, to here, which is my take profit. So I will make my stop loss the same as that. So it means my stop loss would be somewhere here. Okay, so it will be a 1-to-1. Okay, I'll delete this so it becomes clearer. So it will be a 1-to-1. So I would have entered here and closed it here with my stop loss further down there. So that's how, but again, you don't go with three examples that worked and say, oh, I've got a strategy. No, you go back in time and backtest and backtest and backtest and backtest. By the time you do this, you realize that, okay, I'm coming up with something. I am remaining profitable. My strike rate is reasonable. My reward to risk is reasonable. I've got a strategy. Okay. Now, the last thing I'm going to mention is reward to risk versus strike rate. I probably have mentioned previously that I am not averse to negative reward to risk. And that's because over time, I've built strategies whereby my reward to risk is actually very low. So I'm usually trading a 1-to-1 or even 0.8-to-1. But that means my strike rate ends up in the 80s, in the high 80s. Okay. Now, if that is how the strategy that you've back tested works, then, and you are profitable at the end of the day, at the end of the week, at the end of the month, at the end of the year, at the end of 2 years, then that is a valid strategy. Do not get deceived by people that say, by traders that say that you have to have a reward to risk of 5-to-1 or 3-to-1. No, if it works and you are profitable at the end of that period, that is a valid and good strategy. Okay, so do not be scared to trade a strategy that has a low reward to risk, as long as your win rate is high enough to support that low reward to risk. Okay. Now, if your win rate is not high, then you obviously have to be looking for one with a higher reward to risk, like a 2-to-1 or 3-to-1 or 4-to-1 or 5-to-1. But it depends on what the chart gives you, what your back testing gives you. The other thing I was going to mention was big bars. Big bars are also one way to build your strategy. Looking out for big bars forming on the chart and how price reacts to those big bars. However, I've already mentioned this in one of my previous videos where I mentioned imbalances. Big bars just are a type of imbalance. For example, if you look at this bar here, you can see it's a massive bar, but really what's happening is there's been an imbalance between here and here. And I've already mentioned to you what price does around imbalances. And that's it. With all these tips I've given you, there's no reason you should not be able to build your strategy and start to backtest and, and start to trade profitably. That's it.